Hi guys, let's resume with accounts, consolidation of subsidiary. Today on rest of this chapter we have only sums pending. We have to do a little bit advanced sums, practice more sums, consolidation of subsidiary gets over, and then move on to associate joint venture, which will not take this much time. Basically, consolidation of associate joint venture is the same, but the method alone changes slightly, which is not that complex compared to this. Let's do illustration 13, proper exam sum for 15-20 marks. 15 marks is ideal. Okay. From the following balance sheet of H Limited and its subsidiary S, drop as on 31st March 2021, consolidated balance sheet. Okay. They have given only 2 points that we have to note. Reserves and profit and loss account of S Limited subsidiary stood at 25,000 and 15,000 respectively on the date of acquisition, and 80% of shares are held by H on 1st April 2020. What are they saying? They are giving you reserves on the date of acquisition. So this entire reserves is what, guys? Pre-acquisition. Whatever is there in the balance sheet below will be pre and post, mix of both, we have to split. Then they are given one more adjustment. Machinery book value 1 lakh and furniture book value 20,000 of S of subsidiary were revalued at 1 lakh 50 and 15,000 respectively on 1st April 2020 for the purpose of fixing the price of its shares. Rates of depreciation is computed below. So that means they are saying asset was revalued on which day? 1st April 2020. What day is that? Date of acquisition. How do you know that? Above para, 1st April 2020. That is the date of acquisition. What is the date of consolidation? 31st March 2021. So from date of acquisition to date of consolidation, how long is over? 1 year. 1 year got completed. Are you following, guys? 1 year is done. The balance sheet given also is date of consolidation after 1 year. Fairly simple. Share capital, reserves, liabilities, nothing great. Assets are also given PPE, other non-current investments. Down you have the notes, which is fairly simple. Now my question is, and then solution starts, that we are going to do anyway together. Now, why have they suddenly given this adjustment out of nowhere? Revaluation. My question is, this revaluation is happening on 1st April 2020. Is the revaluation accounted in the balance sheet? Is this PPE after revaluation or before revaluation? It is after revaluation. That means if you see book value is 1 lakh, depreciation on machinery is how much, guys? 10%. That means 1 lakh minus 10% depreciation is how much, guys? 90,000. If revaluation is not done, if revaluation is done, value is 1 lakh 50 minus how much depreciation? 15,000, which will come to 1 lakh 35,000 is the book value. Now come down, look at the book value. What is the book value? 90,000. That means revaluation is accounted or not accounted? Not accounted. Are you following, guys? Are you understanding? Revaluation is done for the purpose of consolidation, acquiring finding the price, but such a revaluation is not accounted in my balance sheet. Are you following, guys? So who should account that? I have to account. At the time of consolidation, I have to make necessary adjustments of revaluation. So revaluation means value of asset also will go up. Accordingly, depreciation also will change. I have not accounted for it. How I found out? Question has not given me direct answer. They gave me closing value of assets, which is before revaluation. Correct? How 90 came? 1 lakh minus 10,000. Ideally, it should be 1 lakh 35,000. Are you following, guys? Clear? Who should do the adjustment? We have to do it in the sum. Keep this in mind. Then no other adjustments apart from this. Previous class we did consolidation without adjustments. Now only adjustments, one new adjustment came guys. The last sum is going to have 5 adjustments. How many more adjustments comes? It's not complicated. Let's start solving. Question number 13 for you guys. ICA, it's question number 13 only. Very good. For you guys in the book, question number 12 in the book. So just see either 13 or 12 depending on which book you have. ICA question number 13. Consolidation. Let's start. Step 1. Fast guys. One sum we should not spend more than half an hour. Otherwise it will become too long. Date of acquisition and date of consolidation. Copy paste from the material. Acquisition is 1st April 2020. Consolidation 1st March 2021. See, ideally you should read the question. We are reading it together. Correct. 31st March 2021. So should I write this in the main exam? Yes, your answer will start with that or somewhere it should be there. Step 2, percentage. Fortunately here they have given the percentage in the question as 80%. I will copy paste. Holding is 80%, minority interest is 20%. Even though it is direct, they have given only 80. So you will compute 20 as minority. These two steps are nothing great. Will it carry marks? Maybe half a mark if it's a 20-mark question. Maybe no marks also, but presentation, we have to put it in our answer sheet. Done. Step number 3, like always, the key step is step 3, which is analysis of reserves and surplus into pre and post. We have to go one by one for each reserve. Correct? First come down to the balance sheet. Whose reserve I have to look guys? Loudly I want. Whose reserve? Subsidiary. Loudly. Subsidiary reserve is how much? 1 lakh. Come down. The 1 lakh is broken down into general reserve and P&L. Let's go in the same order. General reserve first. A. General reserve. As per question it is 75,000. So I will write 75,000 and this 75,000 if I go up, this 75,000, how much is pre, how much is post? How much pre guys? Reserves and P&L. 25,000 is reserves. On the date of acquisition, 25,000 was reserves. So this 25,000 is pre. Correct? So balance how much guys? 50,000 is. Are you following how this came? Are you following? No, not understanding. How it came guys? See, question has given on the date of acquisition my reserves is 25. So that day every reserve is pre, everything I earned after that is post. That's it. General reserve is over. You can prepare a chart like this. Okay. Next, B. What is B? Profit and loss account. Similarly, I will split into pre and post. Profit and loss as per balance sheet is how much guys? 25,000. So I will write here first 25,000. This is split again into pre and post. Pre is 15. So 15,000 is pre. What is post guys? Balance 10,000. Easy. Understanding guys, logic. Okay. Any other reserve that is there? So as per question, we have finished this reserve. Any other reserve? Revaluation reserve. It is not there in the balance sheet because we didn't account for it. But revaluation took place in whose books? Subsidiary books. I have to account for it now. How much is revaluation guys? Look at this. Let me write, come down here. C. Revaluation reserve. 1, 2. Whatever assets that are revalued. First machinery became how much guys? 1,50,000 from 1 lakh. The entry would have been machinery account debit to revaluation reserve how much? 50,000. So I will write here revaluation reserve. Machinery how much guys? 50. We didn't account, so we have to account. Are you following guys? Any other revaluation? Yes. Furniture. book value is 20, it became downward revaluation. It has reduced my revaluation. So I will write here furniture and fittings. How much, guys? 5,000 in bracket, because it has reduced. Are you following? As 20 became 15, you can't add 5. So what is the net impact of revaluation? 45,000. This is pre or post? Because I am analyzing all my reserves, because my shareholders funds is share capital plus reserves. Pre or post? This happened on the date of acquisition for the purpose of, look at the question, for the purpose of fixing the price of its shares. That means value is on the date of acquisition. So fully will be pre. 45,000 is fully pre. Are you following, guys? Easy understanding of everybody clear? So now 3 reserves are over. This is step number 3. Anything else should I do here? Anything else? Sir, this is missing, that is missing. Anything else should I do? Hello? Now, let's write the revaluation adjustment. The entry would have been machinery account debit 50,000 to revaluation reserve 50, and the other entry would have been revaluation reserve account debit 5,000 to furniture and fittings 5,000. This is the impact of. Now this change in the value of asset in the beginning of the year will lead to change in depreciation. Change in depreciation will affect what? Profit and loss account. Which profit and loss account? Post. That means my closing balance cannot be 25,000, correct? It has to be reduced by the amount of additional depreciation that we have missed out, correct? That when it will strike me, the minute I do revaluation adjustment here, I should also do depreciation. What is the depreciation, guys? Very simple. Machinery increased by 50. So additional depreciation is 5,000, because they have given the rate of depreciation to be 10%. Are you following, guys? So depreciation will be 50,000 into 10%. How much, guys? 5,000. Similarly for furniture and fittings, what is the depreciation? 15%. So what will happen? Into 15%, how much? 750. Add or reduce? Reduce. Why, sir? Earlier furniture and fittings was on 20,000. Furniture and fittings was on 20,000. Now the asset has become 15,000. So earlier I used to charge depreciation on 20,000 into 15%. How much is that? 3,000. But now I will charge only on 15,000, which is 2250. Are you following, guys? So in a place where I would have charged depreciation of 3,000 because of downward revaluation, now I will charge depreciation only on 2250. So my depreciation is decreasing. Are you following up? So it's a positive impact for me. So one place depreciation increased by 5, other place depreciation decreased by 750. What is the net impact? 4,250 higher depreciation, correct? So what is the entry for depreciation, guys? Depreciation account debit to depreciation to respective asset. Later I will do P&L to depreciation. This P&L to depreciation net impact is 4,250. That means my profit is reducing by 4,250. So which profit? P&L post. Are you following, guys? So my post acquisition P&L will reduce. According to you and me, I earned 10,000, correct? 10,000 is correct before charging depreciation. Now I have to charge depreciation. Sir, why not reduce depreciation from general reserve? We are not following that P&L. Some people can ask, sir, if there is a revaluation, Then from revaluation reserve also we will transfer to P&L higher depreciation. Do you remember guys AS10? We are not doing all of that. That's only an option. If question is silent, only you do depreciation. So my post will now be reduced by 4250. My net to post is 5750. Are you following guys? This is step number 3. I told you step number 3 is the heart of consolidation. Whatever adjustments comes, it will affect my profit and loss account. Then I will take it over here. Clear guys? Following. Now to summarize, general reserve no change. Pre is 25, post is 50. P&L also what you did is correct. Only one adjustment. Reduction for depreciation. Are you following guys? Similarly, revaluation reserve, we took the net value. Are you following guys? Any other adjustment in as per question? We accounted for revaluation, we accounted for change in depreciation. Any other impact because of revaluation? That's it. The final impact will be closing value of asset that will come in balance sheet. No other impact in P&L. Are you following guys everybody? Sir, why are we doing this? Because in the balance sheet in question, they have not accounted for revaluation. That means they have not accounted for additional depreciation. If it is already accounted, then I won't do all of this. One more advantage we have is the revaluation is happening on the date of acquisition. What if it's happening on a different date? Then correspondingly you will compute the different depreciation. For instead of 1 year, it will be for 6 months or 9 months. Like that we have a sum. Later we will do that sum. Okay. So now we will go to step 3A, our magic step. We will prepare the totals. After this, nobody has to stop you for the sum. You can proceed. Particulars, total, H, minority interest. First I will write share capital. How much guys share capital? 1 lakh. We are writing share capital of subsidiary guys. Holding is at 80%, minority at 20%. So holding is 80,000, minority is 20,000. Understanding importance of this step table guys. Next, total pre, total post. Total from the above 3 working notes guys, 3 charts. Add the revaluation, add the P&L, add the reserves and surplus. How much guys? Total pre is 85,000. Total post 55,750. Are you following guys? Can you split now for holding and subsidiaries? How 85? Add the total pre's. 85 is nothing but 45 plus 25 plus 15. How much total pre? So H share total pre 68,000. This is similarly here 40 600 here 11,150. That's it. Now this table visualize guys. You don't actually have to draw in the exam. Visualize. This total is what guys? Step 4 minority. This total will be step 5 cost of control. This 44,600 will be step 6 post acquisition. Post acquisition is nothing but 5750 plus 50 of general reserve. Are you following guys? So this, I hope all of you got this table. So what is the total of, write down next step, step number 4, computation of minority interest. How much are you getting guys? 48,150 is the minority. Let me go and cross check the answer in the solution. If that is only minority, 48,150. Just cross checking to see if you are going in progress. Otherwise, ending you will tell sir something is missing. So minority is 48,150. We got it correct. Are you following guys? From now, sum is same, no impact except that revaluation. Wherever it comes, you have to be careful, guys. Next is step number 5, computation of cost of control, goodwill or capital reserve. Compare what I paid with what you got. In other words, what you paid is cost of investments. How much you paid, guys? Is it there in the question? Is it there in the question? You have to search. Look at the schedules below. In notes, other non-current investment, can you see shares in S Limited, 800 shares at 200 each, which is 1,60,000. So this is the value that is paid. So how much, guys? 1,60,000. Does this question have any pre-acquisition dividend? No, nothing about dividend declared. So always ask yourself, when you write cost of investment less pre-acquisition dividend, this question it is 0. Are you following, guys? Minus net assets on the date of acquisition. How much, guys? 1,48,000. So for something worth 1,48,000, I paid 1,60,000. So 12,000 is my goodwill. Can I write like this in exam? No. You can't write like me. 1,60,000 minus 1,48,000. Sorry, you will not get marks. You need to write that English. What is the English? Cost of investment equal to 1,60,000 less net assets on the date of acquisition which belongs to holding share of subsidiary 1,48,000. Show that breakup. Remember the format I gave. You need to show that working note. Then only you will get 12,000 as goodwill. Let us go and cross check if goodwill is 12,000. Working note 6 somewhere he has given, guys. Yeah, can you see here, guys? Goodwill is 12,000. This English only I want. This 1,60,000 compared with all of this, we get 12,000. Of course, our workings will not match with this because here we are doing one summary table and adding everything in one place. In ICA, what they are doing, in every working note, separately they are adding. If you see minority interest, for example, separately in every working note I am adding post in minority, pre in minority separately. To avoid this and save time only, we are doing this table and analysis. Are you following, guys? Same step 3 and 3A is skipped in ICA. They will do step 1, step 2, straight jump to minority. So again in minority, find pre, find post, take their share. Again in cost of control, find pre, take the share. Are you understanding, guys? That only I have summarized for you in this table. Clear, guys? Sir, will we get marks if we do this? Absolutely yes. I also use the same method when I was studying. Same thing will work for you, guys. Okay. Step number 5. Goodwill is how much, guys? 12,000. Done. Next is computation of reserves. How many have you finished it? Computation of reserves. Good. Already 2, 3 have finished. You have to be ahead of me. You have to be ahead of me, guys. Those who are watching recording. 6 students in the class raised the hand. Already finished the sum. Others are coming in my pace. Come on, guys. Nothing is complicated after this. You can straight away go to balance sheet. Others can come and solve with me. No problem. Computation of reserves and surplus. First, I will write down reserves and surplus of subsidiary. How much is that, guys? Copy of, sorry, of holding. Reserves of holding, how much, guys? 3 lakhs, correct. First I will write reserve and surplus of holding, which is 3 lakhs. Simply I will add what, guys? Post acquisition of subsidiary which belongs to holding. Do I have to compute? No. Above table, how much? 44. How this came? 44,600. The table, guys. If the table is wrong, forget the whole sum. You will get 3,44,600. Here you have to be careful. You have to ask yourself as a practice, is there capital reserve? And add what? Capital reserve. This is some goodwill, so we don't have to add. Because if you don't add capital reserve here, when you prepare balance sheet, it will not tally and you will think what happened because you take this value. So ask yourself, is there capital reserve? If yes, I will add plus capital reserve on acquisition, etc., and I will add it. Are you following, guys? I am building a system. You follow the system, we get the answer. Clear? That's it. Now we have to prepare what, guys? Consolidated balance sheet. Come on, guys, quickly do it. I will do it in 2 minutes time. I will just write it over here. I can do it, but you prepare the consolidated balance sheet in the same schedule 3 format and check if the balance sheet is tallying. Check. Schedule 3 format. Any neighbor, anybody doing in T format, strike their note, guys. We are done with T format. Forget about T format unless you're doing branch accounts. Only schedule 3 will get you the full marks. Recording, do it, guys. You have all the working notes. No intercompany adjustment. Do the balance sheet. Balance sheet, 60 seconds is a lot of time. Quickly write the format, start filling the values. You can use the same format that is there in the question because nothing new is going to come except 1 or 2 things. Do it, guys. It is nothing but line by line addition. Rather, I'm finished. Those who are done, put the hand up, guys. Prepare the balance sheet. The confidence that you get when your balance sheet tallies is something only you can experience. Can I show which schedules? Question everybody has. Look at that. Hard to show the whole thing, but yeah, have a look. Whoever wants to see. Prepare it, guys. Radharam is done. Others, anybody else, put the hand up. Rahul, you can strike Radharam's notebook if he puts his hand down. Online students, recording students, come on, guys. Consolidated balance sheet, do it. I will put pressure. Exam is all about handling pressure, guys. You need to experience the pressure in the class. Recording students, everybody here, we have 50 students here offline. 50 students online, roughly. Online, not 50, sorry. Online, exactly, we have 10 students online. Some about 40 students offline here. Totally 50 students are doing it together simultaneously here. Recording. How many of you are watching? Just solve. Prepare the balance sheet. Tally is good. Otherwise, I will anyway do it in some time. Sumaya has finished. 1, 2. 2 students have finished, guys. Google Meet, if you have finished, just put your hand up. Fast, guys. If you have finished and it's not tallying also, you can put the hand up, no problem. You can put the hand up and try to tally it. I just want to know how many of you finished. Aishwarya online has finished. Good. 4, 5 here. Sauparnika has finished. Yes, good. 1, 2, 3, 4, 5 of them have finished, guys. 6 have finished. Everybody here is studying consolidation for the first time, guys. Recording. Netra has finished. Online Angel has finished. 10 students have finished. The minute 10 are 10, I will start solving it, guys. Let's go up. Follow those who need help. I'm going to solve it together. First, share capital will be how much, guys? Consolidated. 6 lakhs. Check your neighbor's note. Who wrote 7 lakhs? Check 6 plus 1, 7. Find neighbor's note. Anybody wrote 7? 7 lakhs. Line by line addition, but not for share capital. 6 lakhs only. Reserves and surplus, how much, guys? 3 lakh 44. 600. It's there in my working note. 3 lakh 44. 600. Now for exam, the minute you finish shareholders funds, before you go to liabilities, please write what? Minority interest. Minority interest is a peculiar item which is not there in schedule 3. It comes only in consolidation after shareholders funds, before liabilities. You can't write minority last, sir. I will write after liabilities. No. There is a format. If you look at the main solution, can you see here? Minority is coming between liabilities and share capital. Please follow that. If not, this sum it's okay. Now only I am teaching you. So in our working, minority was go up 44. Why did I do it, guys? Yeah, 48. 150, go and write 48, 150. Liabilities, trade payables, just copy, paste, add plus add, 1 lakh 50 plus 57, 2 lakh 7,000. This is my total on liability side. Now asset side, I will tell you exactly where you could have made a mistake. You can't add 6 lakh plus 1 lakh 50. No, because this investments has a combination of investment in subsidiary plus other investments. So you can add only 4 lakh 40 plus 1 lakh 50. The common mistake what they will do is they will add 6 lakh plus 1 lakh 50, forget to striking off. That are you following? How many of you added 6 lakh plus 1 lakh 50? Anyone? One? Understood why? If you come down to schedule, this we have to knock off, correct off. That's the whole purpose of consolidation. 4 lakh 40 plus 1 lakh 50, how much guys? 5 lakh 90,000. Then I will also add goodwill. How many of you forgot goodwill guys? Goodwill, another common area. Goodwill you would have forgotten. I have 2 students, 3 students who have forgotten goodwill. Goodwill will be 12,000. Another common mistake guys. Step 4, step 5 goodwill you are forgetting. Last one is PPE addition. Unlike other sums, you can't add 4 lakh 50, 1 lakh 7. How many of you added that? 4 lakh 50, 1 lakh 7. No, there is a revaluation. Who will account for that? So 4 lakh 50 is correct. Holding you will add just like that. I will add 4 lakh 50 of holding, but for subsidiary there is a revaluation. So what is the revaluation? Building has become 1 lakh 50 minus 15,000, so plus 1 lakh 35. Furniture, what happened? Furniture became 15,000 minus 1,000. 15%, sorry, minus 2250, how much? 12,750. I will add 12,750. Are you following guys? Basically revalued item minus new depreciation on revaluation. Are you following up? Are you getting the logic guys? You cannot take 90 and 17,000. Sir, there are 2 ways to arrive at this. Look at this. For PP there are 2 ways to arrive at. Let me show you both the ways. One is completely new computation. Revalued item is 1 lakh 50 minus 15,000, 1 lakh 35. Revalued furniture is 15,000 minus 15% depreciation, 2250, how much? 12,750. Add both, you get 1 lakh 47,750. This is my book value. This is one way. Sir, how to come from this value? From the question also we can reach. Not only is there in study mat. So I want to show you that method. This method is easier. What they have done in study mat, for somebody reading from there, book value is 90,070 of. I want to get to the answer from this value. How to do it? From 90, add revaluation 50 minus depreciation of 5,000. Are you following guys? Why only 5,000? Because this 90 already depreciated by 10,000, so I will get 1 lakh 35. Are you following guys? Both are the same. It's just the approach. 17,000 revaluation minus 5,000 plus 750 reversal of depreciation. So you will get 12,750. Answer will be 1 lakh 47,750. Are you following both guys? In study mat they would have done, if I remember right, yeah, they have done like that. Can you see here? 20 minus 5 minus 2 to 5. This is the normal way. 1 lakh, this is the normal way. One more, I think next sum they have done it that way, but both ways are absolutely fine. So my PP is 1 lakh 47,750. Go back here. PP will be 4 lakh 50 plus 1 lakh 47,750. How much guys? 5 lakh 97,750 will get. Balance sheet will tally. This is how your consolidated balance sheet will look. So the mistake, if anybody made a mistake, it could have been only in one of these 3 areas. One, you forgot minority, one mistake. 2, you forgot Goodwill. 3, PPE you would have added just like that without forgetting revaluation, or one more rare mistake is adding investment also, which has to be cancelled. Are you following, guys? Clear? How many of you got it correct? How many of you understood now? Clear? Make a note of this. With this we are done with illustration number 13, exactly half an hour or even little more. It's fine. Everybody understanding of? Now if you solve the sum, it will take you only 20 minutes from start to end. In the format only will take time. I hope how many of you, when you prepared consolidated balance sheet, did not write this heading? Gone, half mark gone. You can't write balance sheet, you have to write consolidated balance sheet of holding and subsidiary as of 31st March. Are you following, guys? Schedule 3 format we have to follow, note number, all of that. Clear? Only thing is, for reserves your note number will be your step number. That step 6 will be my note reference. Are you following, guys? Clear? Anyway, this only will come first. In your main answer sheet, start practicing. First you leave one page gap for balance sheet, then followed by all your working notes steps. Okay. So same thing, with that the sum comes to an end. Are you following, guys? Understood? Easy, guys. When you know consolidation of subsidiary well, associate joint venture is very easy. It's the same 6 steps with small changes here and there. That's it. When we get there, we'll learn. Now I'm going to next set of discussion in this chapter called intercompany adjustments. Because so far none of the sums had intercompany adjustments. Now we are going to do intercompany adjustments, guys. So follow with me. If holding has trade receivables from subsidiary, for subsidiary it will be trade payables, correct? So for holding it's trade receivables, subsidiary it's trade payables. In consolidation alone, I will knock off both. Now for those who remember AS 18 related party standard, there I would have told in related party standard you need to disclose related party transactions, but exemption adjustment, intercompany adjustments in consolidation. I don't know if you remember. In AS 18 I would have mentioned intercompany adjustments for consolidation is exempted, because for consolidation I will knock off. You can't tell AS 18 you should disclose. This is one exception. Now let me take another transaction, the only not complex, little bit detailed transaction. In branch accounts we have something called stock reserve. You remember? Unrealized profit on goods sold. Do you remember, guys? A similar adjustment in consolidation now. In branch, head office is selling to branch. Here holding is selling to subsidiary, or subsidiary is selling to holding. Those who are watching this class, you need to know branch account unrealized profit concept to understand this better. Are you following, guys? Same thing which was there in old syllabus, departmental accounts. Now we don't have it in syllabus. So let's take a scenario where holding has sold goods to subsidiary. Goods costing 1000 was sold for 1500. Who made the profit? Holding. So in holding balance sheet, reserves and surplus will have a profit of 500. All of you with me, guys? Very simple, easy if you understand. In subsidiary, this goods will be in stock 1500. Correct? Are you following, guys? So it's a profit of 500 for holding. 1500 is the cost for subsidiary. When I prepare separate financial statements, no problem. But actually, is this profit for me? No, it's a profit only when subsidiary sells this stock. Are you understanding, guys? Are you getting it? If father gives a product to son with a profit, it's not a profit. It's a profit only when the son actually sells it and makes the money. So here, when I prepare consolidation, consolidation is nothing but line by line addition. So when I prepare a CFS of holding, reserves I will add up. Typically what I am doing, I am going to add this 500 with post acquisition of subsidiary, correct? So I will add here 500, and for subsidiary stock also I will add, stock will become 1500. So in my consolidation I am showing stock at 1500 and showing corresponding profit at 500. It's not correct. Are you following? Separate I want to do in consolidation, because of unsold stock you are showing in consolidation unrealized profit. How much? 500 sitting in the books of holding. We have to reverse this. What I should do for reversal? Minus 500 here and minus 500 here. Are you following, guys? So this is called a downstream transaction. What do you say? Downstream? Yes. Why is it downstream? It's going from holding to subsidiary. A transaction flowing from holding to subsidiary where the profit is in the books of holding. So write down intercompany adjustments in notebook. You please write down intercompany adjustments. You split into two intercompany adjustments and split into two. Left hand side you write down, in left hand side you write down goods sold from holding to subsidiary. Goods sold from holding to subsidiary. What is the transaction called? Downstream transaction. The other side will be what, guys? Goods sold from subsidiary to holding, correct? What is that called? This is downstream, other one is upstream. That's the name or term used in the standard. Are you following, guys? What I taught you now is what? Downstream. So don't write anything else in upstream. In downstream, what is the adjustment you have to do? Tell me, what adjustment should you do? In consolidation, reduce the profit from holding. Holding only earned 500. Reduce the profit from holding and reduce inventory from subsidiary by creating stock reserve. Now same example, instead of selling 1000, stock is 1500, let's say 500 is sold. So unsold stock is only 1000. Now how to compute profit? Proportionately. Sir, how, sir? For 1500 profit is. So if 500 is sold, what's the profit? 1/3 will be 166.67. So 500 is sold. So 166 is sold. So what is unsold stock? 1000. So it will be 333.33 is the unrealized profit. Are you following, guys? That unrealized profit I will reduce from reserves and reduce from stock. Are you following up? We did the same thing in branch. Stock and debtors method. Over there, we created stock reserve for the closing stock. Do you remember, guys? Everybody? Hello? Following up? So here you write down, calculate unrealized profit on closing stock of subsidiary and reduce this from, I will reduce from two places. What are the two places, guys? Reserves and surplus of holding and stock of subsidiary. This is only for the purpose of consolidation, guys. Nothing in standalone accounts. Only for the purpose of consolidation. That's it. So calculate unrealized profit on closing stock of subsidiary and reduce this from reserves and surplus of holding and stock of subsidiary. Clear? We are going to do a sum. That's it. Now let me go for upstream. You tell me what will happen, guys. You should tell me what will happen. I'll again come back to the chart. Subsidiary got goods of 1000 and sold it for 1500 to the holding. Now what is happening? In subsidiary books, I made a profit of 500. Upstream it's going up. Holding, in stock they have a profit of stock of 1500. Unrealized profit is same 500, but where to account this? In consolidation. So in consolidation, profit of subsidiary is taken by whom? Holding and minority interest. Correct? In all the sums, this profit we are splitting. Remember the table, guys, holding and minority. So this 500 is now not fully with holding. Let's say 80-20. Holding would have taken 400, minority would have taken 100. So I should reduce the unrealized profit from holding and minority. Are you following up? Sir, I can reduce here only. No, sir. Yes, if I reduce here, no impact. But reduction should happen after takeover. So after takeover means after consolidation, last step only, step 7. Correct? In step 7 only intercompany is coming. That means by the time already minority is computed. So here I have to reduce. Are you following, guys? Are you all understanding, Dinesh? So profit of subsidiary only. This profit is taken by holding and minority. So I will basically reduce like this. In my consolidated financial statements, my stock was 1500. Now I will reduce 500. My reserves and surplus, whatever the value, I will reduce 400. And from minority, whatever the value, I will reduce 100. Are you following up? The only difference is in downstream, adjustment is happening anyway in holding books only. But upstream, it's happening in consolidation. Are you following, guys? After the transfer. So here you write down same thing. Calculate in upstream, guys. In upstream, calculate unrealized profit on closing stock of which company? Closing stock of holding. Be very careful, guys. Closing stock of holding and reduce this from two places. What are the two places of reduction, guys? Reserves and surplus of holding and minority interest. Similarly, stock of holding. This is new. This minority interest is new. Are you getting the logic, guys? Reduce from reserves and surplus of holding and minority interest and stock of holding. It is reserves and surplus of subsidiary only, but subsidiary reserve is taken over by holding and minority. So, sir, for this I can straight away reduce in subsidiary. No, sir. Yes, you can do it, but I will know this later. So the reserve is already taken over by holding. Therefore, I will reduce in holding and minority. Are you getting it? Can you see the thin line of difference, guys, in both? This is a unique transaction of downstream and upstream. So basically, stock reserve will come everywhere. If you are a foundation student, stock reserve comes in consignment. Inter student, we have it in this chapter. Amalgamation also, if you remember, we had 1-2 adjustments in amalgamation. It's there in branch. It will come in CA final also in consolidation and amalgamation. So stock reserve is a concept you should know properly. Are you clear, guys? I have not taught you in detail over here. In branch we spent all that time, but are you understanding the whole idea, guys? Following? So with this background, let's do illustration number 14, which is nothing but upstream and downstream. Let's see if you're able to get this correct. Illustration number 14. Follow. A Limited holds 80% of the equity capital and voting power in B Limited. Who's the holding, guys? A. Who's the subsidiary? B Limited. A Limited sells inventories costing 180 lakhs to B at a price of 200. What's the profit? 20 lakhs is the profit. Who earned? A Limited has earned. This is what transaction? Downstream. The entire inventory remains unsold. Thankfully, I don't have to do proportionate computation in this sum. So, and how much, guys? 20 lakhs with B at the end of the financial year. How to do adjustment? What is the adjustment, guys? Reduce reserves of A Limited and reduce stock of B Limited by how much? 20. So, can I pass an entry somewhat like this? Reserves and surplus of H Limited account debit 20 to inventory of S Limited 20. Is this correct, guys? Yes. Are you following, guys? Look at the answer down. Intra-group transactions. Finally, answer is 20 lakhs would be eliminated from the consolidated FS by reducing the consolidated profits and reducing the value of closing stock. This is after consolidation only. I will do the adjustment. Are you following, guys? Point number B. Let's see if you're getting it. This will of course be upstream. Previous is downstream. This has to be upstream. A Limited holds 75% shares in B Limited. Holding is A, subsidiary is B. A purchases inventory costing 150 lakhs from B at a price of 200. What is this, guys? Upstream. Subsidiary is selling to holding. How much? Profit 50. The entire inventory remains unsold with A Limited for the end of the year. Suggest the accounting treatment. What I should do? Entry will be reserves and surplus of A is the holding. A Limited account debit. Minority interest of totally minority interest account debit to inventory 50. Correct? But I will split 75 and 25. How much is that? Are you following, guys? That's it. Come down, look at the answer. You will get the same answer. 37.5 will be reduced from A Limited share of profit, 12.5 from minority share of profits. Are you following, guys? It's not a hard and fast rule that I should do only in the end of the sum. If you reduce this in analysis of profit itself, I don't have to do the split later. Are you following, guys? In step 3, if I reduce the profit and then split it as pre and post or accordingly, then in that step 3a, it will be automatically included. Basically, logic is where should I reduce? Are you getting that? Hello? Yes. How 37.5 came? Take your calculator, take 50 into 75%. 75% is the share of holding. So 37.5. Okay. Done, guys. Illustration 14 is done. Of course, you will explain the paragraph in exam. What is intra-group? What is downstream? What is upstream? Why I am adjusting here? Why I should adjust there? And then give your conclusion. Okay. Don't expect a separate question like this. It can come in MCQ or this will be adjustment and consolidation. That's going to be the next sum. Okay. We have illustration 15, 16 and 17. Correct? No, I am seeing additional questions. There should be one more sum. Yeah. Additional question 4. Correct? Do you have this question in the book? Additional question 4, last one. Correct? So we have 3 more sums plus that one whole sum pending. Okay. This sum I will do it in the last, guys. This illustration 16, that only is the proper 20 mark sum with all So not this one, sorry. There has to be one more sum. Hold on. Let's practical question 5. Yeah, one more is there, guys. Practical question 5. This only has 5 adjustments. This is the last question. With this, it will end. I'm just checking if there's any new sum. That's it. Yeah. Okay. Fine. We'll do one thing. Let us finish off the regular sums, guys. Let us finish off the regular sums and then come to practical sums. I also told you the difference is this time for every chapter, apart from regular illustrations, we are also solving practical questions in class. That's why extra 30-40 hours in overall recording. Illustration 15. Let's do 15, 16 and close 1 to 16. 15 is a very easy sum. We are doing a small detour now and going into consolidated P&L. Only one sum we have, consolidated P&L. Balance sheet, park it aside for now. We are going to consolidated P&L. Very simple. Consolidated P&L is nothing but line by line addition subject to cancellation of intercompany. See, if I have to write all the three, consolidated balance sheet, consolidated P&L, consolidated cash flow, everything is line by line addition. In balance sheet only we have 3 adjustments. Subject to computation of minority interest, goodwill or capital reserve, subject to intercompany. In consolidated P&L and cash flow, we don't need minority or goodwill, but you have intercompany. That's it. Are you following, guys? Intercompany alone will be eliminated, rest will remain the same. Are you following, guys? Illustration 15. H&S, simple sum, easy sum. Cash flow was easier, just line by line addition. This also is similar, just 1 or 2 small adjustments additionally we will get. That's all. Illustration 15. H&S provide the following information. Basically, they have given income statement, sales and other income, increase in inventory, then you have all the expenses, correct? This also is expense, income is only sales and other income. Come down for adjustments, we have limited adjustments. H Limited sold goods to S at a cost of 120 plus 20%. So they sold at 144. They made a profit of 24. Inventory of S includes such goods valuing 24. What transaction is this? Upstream or downstream? Downstream. H is selling goods to S, but unlike the previous sum, out of 144, how much is unsold? 24. So we have to find unrealized profit only to the extent of 24. Are you following, Vignesh? Getting it? Next, admin expense of S Limited include 5 lakhs paid to H Limited as consultancy fees. What is this? Admin expense of S. So if I draw, you will easily understand. S Limited, H Limited, guys. Follow carefully. Admin expense of S include 5 lakhs paid to H for consultancy. So here I have administrative overhead 5 lakhs. For me it is income of 5 lakhs. Are you following up? So S paid to H admin expense, for me it's an income. What should I do in consolidation? Eliminate this as if it's not there. Are you following, guys? Because when I do consolidation, it will become like this. Admin 5, income 5. So you knock off now. Are you understanding, guys? Next. Similarly, selling and distribution expense include 10 lakhs paid to S as commission. Are you following, guys? Then they are saying H holds 80% shares in S prior to 2001-12. H took credit to its P&L the proportionate amount of dividend declared and paid by S Limited. That we will come to it last. That's it. Prepare consolidated profit and loss. Start guys. Prepare the statement. Prepare consolidated profit and loss account. You have to prepare consolidated profit and loss account, guys. Prepare consolidated P&L. First you prepare the format. Write all the relevant expenses. Use the same expenses that is there over here, or you total it, put everything in notes. We have to do one by one, guys. One by one. I told you it's nothing but line by line addition. Now looking at the question, tell me where all there is an impact. Sales, there is an impact of, because there is intercompany sales 120, correct? Inventory also will have an impact, unrealized. Then you have admin expense and selling and distribution expense. Apart from these 4 items, everything else is line by line addition. So let me finish the everything else. Raw material consumed will be 800 plus 200,000. Are you following, guys? See, first I am doing the ones which are easy, apart from adjustments. Wages and salary 800 plus 150, correct? Of production expense 200 plus 100, 300. Admin and selling, hold on, we will come to it later. Interest will be 100 plus production 300, sorry, 200 plus 100, 300. Depreciation 100 plus 50, 150. These things you can write as it is, because there is no other adjustment. Rahul following up. Whatever I put star, only those things have adjustments. Come down, let's check the answer for these things. Schedule 3 format only is followed, guys. Put everything else in notes, sir. So if you see here, for example, employee benefit 800 plus 150, straight away, just like how we added 800 plus 150, we got 950. Are you following, guys? So first you finish the rest. Done, guys. Everybody, hello. Now we have to do the other ones. Admin, selling expense, sales, increase in inventory. Let's do one by one. Can you tell me what we have to do for admin expense? Let me come in reverse. Admin and selling and distribution expense. Can you guess? Admin expense include 5 lakhs paid to H. So what I should do? 200 plus 100 minus 5. That's it. Correct. I have to eliminate that expense. Are you following, guys? That's it. So it will become 295. Similarly, for selling expense include expense of H include 10 lakhs paid to S. So I will do again 200 plus 50 minus 10. So I will do 200 plus 50 minus 10. You get how much, guys? 245. These two with, sorry, 240 minus 10. So you get 240. These two are done. Are you following? So we are done with admin expense. We are done with selling and distribution expense. Sharon, understanding? Everybody following? Ashwin, getting it? Sure. So what is left now? Inventory and sales. Nothing else. Only these two. I am coming in reverse. So inventory is nothing but 1000 plus 200 minus unrealized profit. We have to find out, correct? That you have to apply normal logic over here. Just one small correction. H sold goods to S of rupees 120 which is cost plus 20. That means this is selling, this is not cost. I took it as cost. So I took it as 120 plus 20% and made it 144. No, this is inclusive of cost. This is selling price. So it is more like X plus 20% is 120. Are you following up? Are you understanding? In this 120, how much is unsold? 24 is goods worth 124 is unsold. So you have to find out the profit, guys. How to do it? We have done this left, right, center in branch. First in 120, what's the profit? How much, guys? 120 into 20 by 120 inclusive of profit, correct? Of how much? 20, correct? In other words, X plus 20% is 120. What is X, sir? 100. So on 120 profit is 20. Those who are watching unable to understand this, go watch branch accounts recording. We have done this left, right, center and spent enough time in branch. Hello. Otherwise also you will know, sir, it's the part of branch, part of department if your whole syllabus, this profit computation on cost, on profit, all of that. So on 120 profit is 20. See here, sold goods for 120, which is a cost plus 20%. So this is selling price. Now how much is unsold? So on 24, what's the profit? 4. Cross multiplication, or in other words, 24 into 20 by 120, you will get 4. So 4 is the unrealized profit, correct? This has to be eliminated from what, guys? Stock. So I will do 1000 plus 200 minus 4. Are you following? It will be how much, guys? 1196. Come down, look at the inventory. Can you see here 1196? Are you following, guys? 1196. We have 1196. Later you will tell me, is it with bracket or without bracket? We discussed in schedule 3 chapter discussion. Closing less opening. That means he is saying if closing is X and if opening is Y, closing less opening plus 1200 in starting. That means closing is more than opening by 1200. Are you following, guys? So closing less opening. Closing less opening means closing is more than opening stock. So in that case, if closing is more than opening stock, I have a positive impact on profit. So in my income statement, I will write in bracket. Are you following, guys? Why in bracket? We saw it schedule 3. Change in inventory. Bracket. Are you following, guys? Sumaya, do you remember? Hello. Everybody clear, guys? So 1196 will come in bracket. Anybody has a doubt, please ask me. Anybody here? 1196, I understood, sir. Why bracket? Yes. If closing stock is 30 and if opening stock is 10, my gross profit is 20, correct? If so, when I am writing in schedule 3, you are not writing debit credit. I am writing continuously in one statement. So when I write here purchases XXX whatever amount, when I write change in inventory, the change in inventory leads to a positive profit impact of 20. But if I write 20 here, it's an addition to my expense, but it's a reversal effect. So I will write 20 in bracket. Following, Rahul? Sure. Murugan following. That's why same way here 1196 I will write in bracket. This has nothing to do with consolidation, guys. 1196 in bracket. Consolidation is 1000 plus 200 minus 4. Schedule 3 only tells you to put in bracket. Done, guys. Have you written down everything in your notebook, guys? Now what is pending? Only sales. Can you try to write sales? I will give you a minute's time. Those who are yet to do it, prepare the format, write all the values, find the net profit, Sales alone, try to do it, guys. It's easy. It's very easy. Try to do sales alone. Remember, it's line by line addition subject to intercompany. It's sales and other income. Normally, we will have split revenue from operations, others. Here, both are added together. Done. Sorry. 5865. Okay, I'll do a simple thing. First, I will add 5000 plus 1000. So, I will add 5000 plus 1000. Any other adjustment? Now, intercompany. H sold goods to S. So, for H it is sales, for S it is purchase. Intercompany of, so I will reduce how much? 120, correct? Intercompany. Then apart from that, what else, guys? This admin and selling expense, for one person it is expense, for other person it is income. In expense you reduced, income also I have to reduce, guys. So I will do minus 5, minus 10. How much you are getting now? 5865. Let's check if that's the answer. Yes, 5865. Are you following, guys? I'll again repeat. All I did is first added holding plus subsidiary minus intercompany of 120 minus admin expense and selling expense, because for 1% it is expense, other place it is income, and I got 5865. Are you all following, guys? With me, Dinesh? Understanding? So 5865. Now look at the answer, guys. You got 5865. Look at the expenses. Materials consumed, just like that, add 1180 minus in bracket 1196. Rest everything. Are you getting 4096? How many of you getting it, guys? Reduce all the expenses. After you reduce all the expenses, you will get 4096. In our working here, you will get here 4096 after all the workings. Just check if you are getting that, guys. 5865. 5865. Check if you are getting. You will not get. Difference of 120 is there for you. You will not be getting it. You will get difference of 120. Why? Because in sales we reduced 120. Then you should also reduce 120 in purchase. For holding its sales means for subsidiary it is purchase. So where is the purchase case? It's part of a raw material consumed. So raw material consumed is 1000 plus 200 minus 120. Are you following, guys? So if I erase the whole thing, if I just have to rewrite the whole thing again, it will look like this. Sales will be 5000 plus 1000, just one revision, minus 120 minus 5 minus 10. Inventory will be 1000 plus 200 minus 4. Raw materials will be 800 minus 120. Understanding why minus 120, guys? Everything should have double impact. Wages and salary 800 plus 150. Production will be same, 200 plus 100. Admin expense will be 200 plus 100 minus 5. Selling will be 200 plus 50 minus 10. Interest will be 100 plus 50. Depreciation is 100 plus 50. Are you following, guys? That's it. Now we will get the answer as 4069. No? 4096. Check. 4096 is coming. Lakshita getting it. Guys, easy or difficult, guys? Not as complicated as consolidated balance sheet, but not as easy as consolidated cash flow. Kalyan getting it. To summarize, we are accounting for three adjustments: intercompany sales, intercompany stock reserve, intercompany expenses. That's it. Guys, are you all following with me? Hello guys. Okay. Now, sum is over, but we have not considered this adjustment of dividend. I don't know if you remember also, this last paragraph, we ignored it altogether, correct? And we still got the answer. Can someone tell me why? H Limited holds 80% equity shares of 1000 in S Limited prior to 21-22. H Limited took credit to its profit and loss account the proportionate amount of dividend declared and paid by S Limited for the year. That means what they are saying, the dividend received from S, I passed an entry like this: bank account debit to P&L account. Is this correct? I should reduce from investment, but look at this. I purchased prior to 21-22. This is which year? 22-23. That means dividend of and amount of dividend declared and paid by S for the year 21-22. So what they are saying, you purchased, this is 21-22. Before this, the investment took place. I am in the year 22-23. For this year, I am getting dividend. Now, it's post or pre-op. For the year 21-22, I am getting the dividend. Now, but acquisition took place before 21-22, correct? So, dividend is post or pre? Post. Are you following? See, acquisition took place before 21-22, maybe 19-20, I don't know. Look at this. Acquisition, you read it again. Acquisition prior to 21-22. Can you see, guys? That means before 21-22, but dividend is paid for the year 21-22, which is paid for this year. So my dividend is post. If it's post, it has to go to my income statement. It has to go to my P&L. That means they have correctly taken to the P&L. Look at this. Has taken to the credit of its profit loss account. So it's already part of this 5,000 and 1,000. It's fine. No need to do any adjustment. Only if you decide it's pre-acquisition dividend, then now you have to reduce that from this 5,000. Are you following, guys? For example, if it is pre-acquisition dividend, if they are given the rate of dividend, let's say 10% on share capital, you will compute that amount of dividend and reduce it from 5,000. Are you following up? Are you getting the answer, guys? Two possibilities is there. This sum we are ignoring, so you are thinking, okay, it's over. But exam they might give the opposite. If the dividend is pre-acquisition and if they have taken to the credit of P&L, you will reduce my income. Are you following, guys? That time the rectification entry should be like this: P&L account debit to investment. So I have to reduce from my P&L. Are you following, guys? Danish, you are getting it? 100% clear. With this we are done with illustration number 15 is also done. We have last illustration number 16. We will do two more sums for the day. Illustration 16, MCQ and practical question. One more we will do. Okay. Follow, guys. Are you all with me? Hello. This question also is unique. Like consolidated P&L, this is another unique question. Very easy. 10 minutes question. That's all. Okay. First the theory, guys. Accounting policies like WDV, SLM method, FIFO, weighted average. Can holding follow, let's say, weighted average and subsidiary follow FIFO is a question. Am I allowed to do this, guys? Why no? They say you have to follow same accounting policy for the company. What if subsidiary is a different nature? Are you getting it, guys? Are you understanding? So can holding and subsidiary follow different accounting policies? Answer is very much yes. Holding can follow WDV, subsidiary will follow SLM. It's totally alright. But for the purpose of consolidation alone, both should follow same policy. So you follow separate. But when I am doing consolidation, you have to make the adjustment as if both are following either WDV or either SLM. Both should follow same accounting policy. That's it. With this background, let us do sum number 16. Very easy. Mark it as important because they have never tested this. Even in old, it's an old syllabus question. Carry forward to new syllabus, same question. But they have not tested in old syllabus even once. Consolidated P&L they tested for 10 mark question, guys. I am not joking. 10 marks it came. Consolidated P&L. Easy or difficult? Easy. This also is very easy. But mark it as important. Never tested. This you may need little bit of my help, but otherwise it's significantly easy. They have given balance sheet. Can you see share capital, reserves, liability, everything familiar for holding and subsidiary? I presuming no, there is no holding subsidiary. It's only for subsidiary. Only for subsidiary. This is previous year. This is current year. See 2010. They gave it opposite. Okay. Then come down, they gave assets, liabilities, no consolidation. They gave some notes also. Go through the notes, nothing great, everything is familiar. Come down to 3.4. There are 4 adjustments that we have to consider. B Limited is a subsidiary of A. Both the companies are following calendar year as accounting year. Okay, perfect. Can the financial year be different for holding subsidiary? Yes. Why not holding in India, subsidiary outside India? So different financial year. Then what you should do in consolidation? Convert both to same financial year. We don't have in our syllabus case, but it's there in final. Subsidiary will be foreign subsidiary in dollars following June, July. Holding is in India, April, March. For example, take Tata. Jaguar is in UK. Jaguar follows UK financial year. Here we follow April, March. That is in dollars. This is in rupees. This is April, March. That is June, July. What you should do? First convert that dollars to rupees and also convert that financial year to this financial year. So how to do that, sir? You have to convert both to April, March. You have to re-prepare the accounts. You don't have it in inter, only in final. That's why he gave both are following calendar year. Escape. That's it. Come down. A Limited holding values inventory on weighted average basis, but B Limited uses FIFO. So I have to convert. To bring B Limited, I should make subsidiary into holding. To bring B Limited's value in line with those of A, its value of inventory is required to be reduced by 12,000 at the end of 2020 and 34,000 at the end of 2021. Adjustment. They are giving first adjustment. Second, B Limited reduces 1% from trade receivables as general provision. A Limited reduces nothing. That's the meaning. If B Limited is reducing 1% as provision, A Limited is providing 0 provision. And last one, prepaid expense in B Limited include advertising expense carried forward of rupees 60,000 in the year 2020, 30,000 in the year 2021, being part of initial advertising expense of 90,000 in 2020, which is fully written, which is written off over 3 years. Similar amount in A Limited has been fully written off in the year 2020. 3 differences in accounting policy we have to impact, create the adjustment. Restate the balance sheet of B Limited after considering the above information. Are you following, guys? Clear? Now, very simple sum. Answer is not even half a page. It's only about application of concept. We will do it together. You tell me, all these will impact what? These changes will impact finally where it will impact. No, see, I am changing, very simple. Holding company, nothing to change, it remains the same. In subsidiaries balance sheet only, I am changing a few things for meeting with accounting policies. So all these changes will impact what? Subsidiaries, which item in balance sheet? Reserves and surplus. Either reserves will increase or reserves will decrease. How, sir? I am not understanding. Inventory valuation change will impact gross profit, will impact net profit, will impact reserves. Provision will impact profit P&L account, will impact net profit, will impact reserves. So every change is going to impact my. So instead of changing everything, I can just change my reserves by passing rectification entry. Correct? Should I make a change in holding? No. That's why they have not even given holding balance sheet. I should make change only in subsidiary. Now subsidiary change, should I change for 2010 or 2011 or both years? I am preparing consolidation for which year? Current year. Which year is that? 2021. Can you see here, guys? Question 31st December 2021. That means I need to consider which balance sheet? Current year balance sheet. What to do with previous? Nothing. Are you following, guys? See, any adjustment will adjust current year financials. I can't change previous year because previous year is already prepared, audited, given to shareholder. Just for comparison, they are given over here. Are you following, guys? So two things, two learnings. First, I will impact only reserves and reserves of current year of subsidiary. Are you all with me, guys? Let's go one. So let me take the reserves. Look at the reserves of subsidiary. How much? 7,14,000. So I will prepare a small table. Particulars, amount, item, reserves and surplus as given, which is 7,14,000. Now I have to pass my rectification entries and make the changes. Let us pass the entries, guys. Let's come from reverse. Have you understood so far, guys? I have not started solving the sum. I have just told you where to make that adjustment. I will make the adjustment only in the books of subsidiary, in subsidiaries, current year only, not the previous year. Are you following, guys? And the adjustment will predominantly happen in reserves because any change, revaluation affects reserves, depreciation affects reserves. So reserves, if I change, whole changes then. Are you getting it, guys? Now let's go adjustment by adjustment slowly. I want you to follow. If you are tired also, it doesn't matter. You need to follow, guys. Adjustment by adjustment. Let me come in reverse. Only 3 adjustments because A is not an adjustment. It's just information. So it's D, C, B. That's it. Each one separate, no interrelation between each other. Let's understand what is in D in a way that you tell me the answer. Prepaid expense will generally be where, guys? Balance sheet, asset side. Okay, perfect. Prepaid expenses in B Limited include advertising expense. We studied in AS 26. Advertising expense. Can it be an asset? No. Intangible items should be written off. Yes or no, guys? First of all, can I capitalize advertisement expense? No, it should be written off. But what B Limited did? Carried forward 60,000 in the year 2020 and 30,000 in the year 2021. That means in above balance sheet, in prepaid expense, out of 48,000, 30,000 belongs to advertisement of this year 2021. Correct? Look at this. 30,000 in the year 2021. I don't care about 2020. It's previous year. Being part of initial advertisement expense of 90,000 was spent in 2020, which is being written off over 3 years. That means their idea is, what they are doing, their idea, they initially incurred 90,000, in which they are writing off 30,000 in each of the years, year 1, year 2, year 3, correct? In that, how much is already written off? 60 is already, that's why 30 is now there in the balance sheet of 2021. Can you see here? Carried forward. Carried forward means after write off. First year I carried forward 60, that means I wrote off 30. Second year I carried forward 30, that means you wrote off 60. So now I am in the year 2021, which is my after year 2 completion, because 2020 is when I incurred. 2020 is first year, 2021 is second year, where I already wrote off 60,000. Are you understanding what has happened, guys? But similar amount of advertising expense, 90,000 of A Limited, had been fully written off in the year 2020. Are you following? That means the difference is subsidiary is writing off for 3 years. Holding wrote off full 90 in which year? 2020. So are you understanding, guys? So what I should do? Write off fully now itself. I can't carry forward. How much I am having in the balance sheet? 30. Not allowed. I have to write off now itself. Are you following? Because my holding already wrote off, I should also write off. What is the entry for writing off prepaid expense? P&L account debit. How much, guys? 30,000 to prepaid expense 30. So if I have to write it neatly over here, I will come to reserves. I will write 2 less prepaid. How much, guys? 30,000. Are you following, guys? My entry would have been P&L to prepaid. Why entry is needed? When I prepare balance sheet again after this, both sides should reduce. Reserves will reduce by 30, prepaid will reduce by 30. Are you following up? Everybody clear, guys? Getting the logic? In 2020, holding wrote off fully. I didn't write off, so write off now. Whatever is unwritten off. Are you following, guys? With this logic, try adjustment B now. You will get logic. See, B Limited deducts 1% from trade receivable as general provision against doubtful debts. Provision for bad and doubtful debts. A Limited is not reducing provision. That means I will draw a small chart. What they are trying to say, in debtors, trade receivables for A and B, A is not reducing any provision. B is reducing 1% provision and writing net amount. You have to know. Add back provision. What is the entry for adding back provision? Trade receivables account debit to P&L. To provision, whatever reversal, profit reserves will increase. Can you compute how much is that? So 3 add provision reversal. Provision reversal. Can you compute how much is that, guys? It's there in the question. Compute how much is the provision reversal. Fast, fast. Yes, Lakshita, how much? 8,000. How many have you got? 8910. 8,91,000 is after provision. So I will add back into 1%. How many have you got? 8910. Yes, Sharan, 8910. Now very simple. 8,91,000 is after provision of. That means if I have to write X minus provision at 1% is equal to 8,91,000. So if this is 100 minus 1, this is 99. You have to do reverse working. You can't do direct. Are you following, guys? So how to find provision now? 8,91,000 into 1 by 99. How much you will get? 9,000. Or this, in other words, this is 9 lakhs minus 1%, which is 9,000. If I reduce, I will get 8 lakh 91. Are you following, guys? Common mistake. Most of us will take 8910. Reversal of provision. So reverse working and add back how much, guys? 9,000. Are you following, guys? You know the answer, but computational error. So I will add back 9,000, which is nothing but 8,91,000 into 1 by 99. Are you following, guys? Anjana getting it? How many of you got 9,000 correctly? Everybody understood? Anjana understood now? Third one, last adjustment. So that means what is happening? Reserve is increasing. Debtors also increases by how much, guys? 9,000. Look at this. When I prepare my consolidated balance sheet answer, I am straight away jumping to the answer, guys. If you look at this, my trade receivable has now become 9 lakhs. My prepaid has become from 48. I am reducing. It's wrong over here. Look at the question. 18. Are you following, guys? So it was 48. Reduce 30. So it becomes 18,000. Book, it's wrong over here, guys. It's not 48. It has to be 18. Printing issue. What is there in the book? 48 or 18? 48. Printing mistake. Make the change in study mat, guys. That's it. It's not 48. It has to be 18 because there is a reduction. Correct. In book, answer is correct, but notes is wrong. Are you following, guys? Similarly, last adjustment now. Adjustment number B. Guys, how many of you understanding? Hello? Adjustment B. A Limited values inventory on weighted average basis while B Limited uses FIFO. No, you don't have to compute, they are given the values. To bring B Limited's value in line with A Limited, its value of inventory is to be reduced by 12,000 at the end of 2020 and 34,000 at the end of 2021. What you should do? Reduce 34 or 12 both. Previous year I don't care, because whatever happens in previous year is automatically adjusted for current year. Correct? See, are you understanding, guys? This 12,000 reduction in 2020 would have automatically been carried forward for this year. So I will say that this 34,000 is inclusive of 12,000. So don't do double impact. 34,000 I will reduce. Correct? So I will come here, less closing stock. How much, guys? 34,000. Let me check. Yeah, that's it. 34. We are right. So how much you are getting net, guys? 6 lakh 59,000 is my net profit after adjustments. Here also you have 6 lakh 59,000. Correspondingly, inventory will reduce by 34,000. Come here. What was the inventory before, guys? Look at the question. Inventory 7 lakh 42. Now I will reduce 34. How much? 7 lakh. Can you see here new balance sheet? 7 lakh 8,000. 9 lakhs trade receivables. 18,000 prepaid. Correspondingly, reserves has now become 6 lakh 59,000. That's what we computed here. 6 lakh 59. So your new balance sheet remains the same. No minority, nothing here. We are doing balance sheet of whom, guys? Subsidiary. This is before consolidation. Only one change in liability. Reserves became 6 lakh 59. Asset side 3 changes. Inventory, trade receivables, prepaid. Are you following, guys? Hello? Yes. When you write the answer, you will write the same para what I explained. Consolidated financial statement should be prepared using uniform accounting policies. Are you following? Question never tested in the past. It was there in old syllabus. Same question copy pasted in the new syllabus study mat, but never tested. So it makes it important for new syllabus. Easy or difficult, guys? If a new adjustment comes apart from these three, will you be able to handle it now? You should just know where to make the change. Let me give an example. Just let's see what you will do. Let's say, for example, okay, let me take investment, okay, normal investment, not subsidiary investment. In holding investment is carried at cost. In subsidiary, investment is carried at fair value. So I have to make the change. So let's say here cost is 5,000, fair value is 6,000. But I have to change method from fair value to cost. So I have to change my investment from 6,000 to 5,000. What's the impact? Profit reduced by 1,000. My entry will be P&L account debit 1,000 to investment 1,000. Are you getting it, guys? That's it. Any new adjustment comes, don't panic. Impact goes to my reserves. Make changes accordingly. Are you following, guys? With this, we are done with sum 1 to 16 except middle one sum. I remember illustration. We'll do that in the next class. Previously, I used to end the class over here and go home, but we have practical questions in MCQ. So we will do that. Let's do MCQ just for practice and then do one last question for the day. MCQ, I'm trying it out first time with you guys. Even I don't know the answers, guys. Minority interest should be presented in the consolidated balance sheet as part of liabilities, as part of equity, separately from equity and liability. Which one? Separately from liability and equity. It's coming in middle. Do you remember, guys? Check the answer. C. Separately from equity and liability. Next. Minority of subsidiary is entitled to, you tell me what? Capital profits means pre. Revenue profits post. Both capital and revenue. Neither capital and revenue. Answer. Both. Remember minority pre and post. Answer is C. Check if it's correct. Yes, answer is C. Next. Are you getting MCQ? I told you MCQ is a byproduct of our preparation. Nothing extra. Learn the concepts well, MCQ will come automatically. In consolidation of accounts of holding and subsidiary, dash is eliminated in full. Come on, guys. Tell me the answer first. A or B or C or D? Mutual intercompany earnings. We also call them as mutual earnings. Eliminated. Next. In consolidated balance sheet, the share of outsider and net assets of subsidiary is shown as. Come on, guys. Like this, if MCQ comes in exam, you will wish for more MCQs. Minority interest. Next. Provision for tax made by subsidiary company will appear in the consolidated balance sheet as item of current liability, revenue profit, capital profit, current asset. What is provision for tax? Liability. Where it will come? Current liability. That's it. What is I will teach in this? Check the answer. Yes, CAA. That's it. MCQ is done. Are you following, guys? Easy. It's only a byproduct. Focus on the prep. Once you are done with the prep, go to the ICA website. Try out that MCQ they have given. They have launched that new some AI based MCQ whatever. You try it out for practice. Okay. Done. Now coming to practical questions. We have two questions. Illustration 4 and 5 left. Correct off. So we basically have 3 sums left in consolidation of subsidiary, guys. In the main illustrations, one sum we have illustration 5, and in practical problems we have 4 and 5. As per I said, 3 sums. With that subsidiary will get over. That's it. Today I will do one of these 3 sums. We will discuss in the next session. Recording go to the next session, guys. With this we will end this. Thank you.